Hi guys, welcome back to Trademanza's weekly educational video where we bring to you interesting things about the companies listed on the Indian stock market and trading strategies. Before we get started with today's videos, subscribe to our channel, switch on notifications and like our videos, and also download our app so you can try out our fun games and quizzes. Now, as we know, the indicator series is going on right now, and we've been getting a lot of requests to cover these videos in Hindi as well. So don't worry about that. Once we have finished making all the indicator videos in English, we'll be re-releasing them with a Hindi version as well. So last week's video we covered MACD, and today I bring to you another very interesting indicator called Bollinger Bands. So first I'm going to explain to you what the Bollinger Band is, and then I'll tell you some good things or some good strategies of how you can use Bollinger Bands. So as we can see, Bollinger Band is basically a band over here, and it consists of three lines, these two blue lines here and this line in the middle. Now this line in between is nothing but the 20-day exponential moving average, whereas these two blue lines are just a particular standard deviation away from the moving average. So what that means is if I go to the settings here, you can see I can change the length of the moving average. I can make it a 50-day moving average if I want, or I can make it a 20-day moving average, and I can change the standard deviation to values like 1, 2, 3, or whatever I want. So the point of the standard deviation is that it tells you how overstretched the market has come from its median value. So in finance, we know one of the most common sayings is that anything which is always overstretched always reverts back to the average, right? Even Nassim Nicholas Taleb has said that everything reverts back to the mean. So Bollinger Bands somewhat try to apply that strategy. That is, we try to look at when the stock is at a standard deviation of 2 or 3, and then we try to find reversal opportunities from there. Or the other way to use this indicator is to also catch a trend for as long as possible. So I'll tell you how it works. The first thing is that we need to look for a very good squeeze. Okay, so the first strategy is we want to look for the Bollinger Band getting squeezed up. When the Bollinger Band is squeezed up, what that means is that the market's volatility is very low and the market is consolidating, and there's going to be a breakout or breakdown on either side. And as soon as we see that the breakdown or breakout has happened after a squeeze, whichever direction the move is in, we enter the trade in that. And then we can see that we if in this case example there was a squeeze, and then finally the Bollinger Bands, it broke down here, and then we can see that the market gave us a really nice move. And what we can do with this strategy is that the middle line here, which is the 20-day moving average, we can use it as our trailing stop loss, right? Like look at this. If we use that as our trailing stop loss, we are able to capture the move all the way up to somewhere here. So we can capture this as 100 points, whereas we can keep the entry right above the candle as our stop loss. Another way to use the Bollinger Bands is also to find out good entry points in trending markets. Like take this example only. The market here is in a clear downtrend, but going long or going short every time when the candle goes below the band would not be a very wise idea. So what one can do is one can wait for some sort of pullback towards the moving average and look for shorting opportunities over there. And then what you can do is you can keep your stop loss just above the band, just above the moving average here, or you can even keep the above wala price band as your stop loss. So we can see here, if we do that, we get many good opportunities. We could have gotten this as, if we miss this entry here and we wait for some sort of pullback, again we get this entry here, we get this entry here, we get this entry here. So the usage of Bollinger Bands is actually very similar to that of how you would use your normal moving averages, just that they also provide you with those standard deviations, so you get an idea of when not to trade. Like for example, if after touching here, the market has already gone down this much, now maybe you'll be looking for some shorting opportunity now, but at least the Bollinger Band, the lower band, will show you something that you should not be shorting over here, and instead you should be waiting for a pullback. So they give us a good range in a trend. That range allows us a good stop loss, it allows us good entry levels, and it also shows us possible targets. One mistake which many people make while trading Bollinger Bands is that just because of what we said, that everything reverts back to the mean, it doesn't mean that if something is close to its lower band, you go long, or if something is close to the upper band, you go short. No, you have to keep in mind what the trend is. For example, after this squeeze, the market broke down and is now in a downtrend. So we should not be looking for going long opportunities, even if it's close to the lower band. Instead, we should focus on finding a good entry close to the middle band or the upper band, because they will both give us good stop loss and also provide us with good risk reward ratios. I'll show you some more examples here. Like look at this example as well. We have a squeeze over here and then boom, the market breaks down. Another example is you can see there's somewhat of a squeeze here and then boom, the market breaks down. So what this does is it gives us really good entry levels and also allows us to catch trends for as long as possible. So, guys, that's it for this week's indicator. Stay tuned to our channel every week because we're going to bring to you many more indicators like this, and then we'll redo the entire thing in Hindi for our other viewers as well. Thank you.